Hello, good morning, ladies and gentlemen. How are you all doing today? Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I do hope we all had a wonderful weekend out there, and I'm so excited to be with you this morning and welcome you to the first edition of the Forex Morning Mastery with Sheriff Daramola. Well, I'm sorry for coming in a little bit late this morning without any prior notice, as while I was actually live on and about to kickstart the session, I just realized that I had some network issues and I had to swap my router so that we do not have any issues when we are actually live. So that was why I was a little bit late this morning. So I'm very glad that things are working fine right now, and then we can dive right into the business. Well, as usual, it's a new week, and of course, we are going to be looking at three major assets for this week, as usual. And the assets we are looking at this week are the US All Spot, the GBPUSD, and of course the XAUUSD, where I was able to identify simple setups, simple trading setups using fundamental tools such as trend lines, key levels, and of course chart patterns to dissect the current market structure. So we are going to be looking at that in details and how we are going to be managing our trades as we get ready for both the London and the New York session today. And for those who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning. And you might be asking what this is all about. Well, as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we come to review our trading positions if we still have any running, and of course use the information we have on the chart to strategically position ourselves ahead of the London and the New York session. Of course, this happens on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today, and of course be part of the subsequent editions, as the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. And I see a couple of comments here in the comment section. Good morning, Ika Diary. Good morning to you. Good morning, Princess Aboluwekwe. I'm very excited to have you guys with us this morning. And I do hope we all had a wonderful weekend out there. So this morning, like I said, in anticipation of this week, I already did a top-down analysis on the US All Spot and of course the XAUUSD. And for those who are on my channel, on both my TradingView and Telegram platform, and of course if you are subscribed to the channel, you would already have seen my video on this asset. So it's very important that you watch this video, as it's going to give you a background knowledge of what we are going to be discussing on the 1 hour time frame. So during the Forex Morning Mastery, we only deliberate on the 1 hour time frame. So if you do want to have a background knowledge of how we got to the point you will be seeing on the 1 hour time frame, then I encourage you to watch my videos on these assets. The links are right in the description box of this current video you are watching. So if you had not watched it, click it and watch it after the live session, as it can also serve as an educational tool for you to pep up your proficiency in price action analysis as well. So with that being said, here we are going to be diving right into the business. And as usual, the first thing we usually do in this community is to check on the economic calendar. And for those who have been with us for a while now, you know how important this is. Understanding the economic calendar isn't just about fundamental analysis, but it's also a crucial aspect of technical analysis too. So we can identify potential correlations between key economic releases and specific technical patterns on the chart, and this of course and by knowing when these major economic announcements are scheduled, we can anticipate potential volatility spikes, trend reversals, or even breakout opportunities if they will happen. So we would have anticipated it in time. So it's like having a roadmap that guides our technical analysis decisions. So that is why we usually check on the economic calendar. So as usual, what we usually do here is to focus on high impact events from the economic dockets that affects the assets on our watch list. And based on the asset we are looking at for this week, we are going to be focusing on the United Kingdom and the United States economic docket. Now for today, there are no high impact events for today. So what I'm going to be doing here is to filter in the medium impact event. So let's take all these ones out. So we are going to be focusing on the United States and the United Kingdom, and then the extent of the impact will be streamlined to only the medium and the high impact event here. So apply the filter and let's see what we have on the chart. Now let's allow this to load up. Okay, here we go. So for today, Monday, October 16th, we do not have any high impact event like I said earlier, but we have some events that also has a tendency of influencing the market sentiment, of course. Now the first one here came in about an hour ago. That is the speech from the Bank of England's Peel is the Executive Director for Monetary Analysis and Research of the Bank of England. So he had a speech about an hour ago, though I'm yet to have an highlight into what he said in that meeting. But before the end of today, I should be able to get something, and I will be doing a report as I share our preparations for tomorrow. So whatever it says here is going to be giving us an insight into the monetary policy of the Bank of England and of course the economic outlook of the United Kingdom, which of course will give us an insight into how we are going to be positioning ourselves ahead of today's trading sessions. Then later on today, in about 4 to 5 hours from now, we are going to be having the New York Empire State Manufacturing Index. This is another very impactful event too as well, as it gauges the business conditions for the New York manufacturer. It's a survey that is conducted by the Federal Reserve Bank of New York, and generally speaking, a positive result indicates a bullish signal for the United States dollar, of course. Now, if we look at the previous data here, it came in at 1.9 for the month of September, and there is a consensus economists are projecting -7, which is not a palatable figure if you compare it with what we had the previous month. So there is a general belief that there will be some level of contraction in that sector. So we're going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then later on today, we are going to be having the publication of the monthly budget statement, though there is no time frame yet, but as soon, I think as time goes closer to this event, we are going to be having a precise time frame on this one. And this statement here summarizes the financial activities of federal entities, disbursing officers, and Federal Reserve banks. And a positive budget statement that receipts exceed budgetary outlays is seen as a positive signal for the US economy. Now, if we look at the previous data here, it came in at $89 billion, which is a little bit on the high side compared to what consensus are projecting, which is coming in at a deficit of 78.6 billion. That is not a very favorable data to work with, if you would ask me. So we are going to be looking forward to what the actual data is going to be too as well, to have an insight into the health condition of the United States. Then later on today, much more later in the day, we are going to be having a speech from Patrick T. Harker, who is the 11th President and Chief Executive Officer of the District Federal Reserve Bank at Philadelphia. Well, he had a speech last week, Friday, and his statement was more of leaning towards the tendency that there wouldn't be any further interest rate hike based on the fact that the inflationary data that came in last week, that is the consumer sentiment index, the consumer price index, and of course the producer price index, does not have an element of inflationary issues at this point in time. So he is suggesting that there's likely going to be an interest rate hike coming later in the. So we are going to also look forward to what he's going to say today, as it would also give us a follow-up detail on what the US economic outlook is. So these are high impact events we are going to be looking forward to today. And of course, you know that as technical traders, what we are going to be doing is to sniff through the current market structure to see how we can strategically position ourselves ahead during or even after this event using technical structures and patterns. And of course, we know that the anticipation of these events alone has a tendency of influencing market sentiment ahead of the event, which of course would reflect on the chart as transition of price action. Now, talking about price action, the first asset we are going to be taking on today is going to be the first one we should be taking on today will be the US oil spot commodity. Now, for those who are with me on both my TradingView Telegram platform and right here on the YouTube channel, you must have gotten an update on my intentions of positioning myself for the next move today. Now, for those who had watched my video, you would realize I talked about how price action appeared to have broken out a very important level, that is the $85 area, which happens to be our key level for this week. So let me show you what things are looking like here. So ahead of this week, we have a key level situated right here. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we hold on to a bullish bias. We look out for patterns, structures that support the idea of buying that asset. But if price breaks down our key level, then we want to begin to look out for selling opportunities. Now, prior to price breaking out of that key level, we saw a very interesting setup here where price action transitioned into a potential reversal pattern, as you will see here. Now, since the beginning of this month, we saw this impulsive move bring price into the $81 zone. Now, despite the fact that throughout the course of this month, it was more of selling the US oil spot, something interesting happened during the second week of this month. We begin to notice how sellers found it difficult to break down the $81 area. As you will see right here, price rejected that structure, then price action transitioned into coming back again the second time with an attempt to break down that structure, but that also failed to insinuate a reversal setup unfold behind the scenes. Now we have something looking like a double bottom structure, which from a technical standpoint is considered to be a very strong reversal pattern. Now, whenever we have this kind of reversal pattern, the next thing we do normally do is to mark out the neckline of that reversal pattern, as the breakout of the neckline will be validating the potency of that reversal pattern. And interesting enough, you will see here that the neckline shares a confluence with that key level at the $85 area, making it much more important and a level to look out for as we head into this week. Now, with the situation we have here, considering what happened on Friday, we finally saw the breakout of that neckline to validate the reversal pattern. And from a technical standpoint, whenever price action does break out of a structure like this or of the neckline, we expect that some point in time price may come back to retest that structure to incite an uptrend scenario. Now, another thing here is this. I also talked about this in my video on the USOILSPOT. I said another reversal pattern appears to be right here. Again, quite interesting, isn't it? We also have another reversal pattern here where the neckline lines at the $83.50 level. Now, this is where it all becomes very interesting. Now, I will need you to listen attentively to this. Now, we have two necklines here of two reversal pattern. We have the major reversal pattern, and within the major reversal pattern, we also have another reversal pattern where we have a neckline for both of them falling within a range where we can actually use to anticipate the next move if price drops to the downside. Now, the center of focus here is if price drops, I want to see it retrace into the zone where I want to be looking out for potential reversal patterns to join the uptrend continuation. So if I give a visual representation, so we have something like this, price dropping into the zone where the appearance of reversal patterns, buying pressure, will incite that uptrend continuation. So this is a key zone area I would also want us to mark out on our chart just in case this week starts on a very strong bearish move. And if it happens, I want to see it as a retracement phase into structure where we look out for buying setup to join the uptrend move. Now, with this explained here, let's scroll into what has been going on in this market since the beginning of this week. Now, if you look at the structure here, this is what I shared on both my TradingView and Telegram platform. So for those who are with me on this platform, this is what you will have already, and this is how we are going to be planning for today. Now, if you look at the structure and look at the nature of trading activities since the beginning of this week, it is quite clear that we are in an indecisive phase. As you will see, price action is currently confined within a range between the $86.60 level and the $85.90 area to emphasize the level of indecision or uncertainty at this point in time. So it just shows us that traders are still trying to weigh their options as everyone is concerned about the aggressive, the nature of the development related to the Israel-Hamas clashes, and as a result of this, majority are refraining from taking aggressive positions at this point in time. So everyone is testing waters here, so the market is a little bit risk adverse. So we need to be very, very cautious at this juncture in time. Now, what we are going to be doing here is to exercise patience since price action is right within a range here. And all we are going to be doing now is to wait for a signal, either in the form of a breakout of the resistance line to give us an opportunity to join the uptrend continuation, or price may likely incite a retracement into those structures I mentioned earlier, where the breakdown retest of the support line will be all we need to capitalize on the bearish move. Now, let me talk about the potentials of sellers at this juncture. Now, looking at the structure here, we have the support line of that range at the $85.90 level. As you will see, sellers have been struggling around that area. And if price breaks down the structure, we are likely going to be seeing a retracement into the zone we identified between the 85 and the $83.50 area. Now, if I am going to be selling the USOILSPOT this morning, I will need some confirmations to happen. This is a very strong bullish trend, and considering the fact that there is still this fear that has cast over the market over the possibility that the crisis in the Middle East could restrain oil supply, this idea alone has a tendency of pushing price further to the upside. So if we are going to be selling here, we need to wait for confirmations to happen. And what is it that we will be looking out for? A breakdown of structure, first of all, very, very important. Scale down to your lower time frame, like your 10 minutes, 15 minutes time frame, to confirm the breakdown, where we want to see retest of structures and signs that buyers are finding it difficult to climb back above the $85.90 level, which of course will reflect on the chart as continuous selling pressure below this area on our lower time frame to join that downtrend move. Now, if the bearish momentum happens here, we are looking at a potential of a minimum of 100 pips to a maximum of 250 pips. That is, if price continues further into that $83.50 level we identified earlier. So that is how we are going to be capitalizing on any bearish momentum at this point in time. Now, in as much as we've talked about the potentials the sellers have here, it is also important that we look at the possibility that price may not drop below the $85.90 level and continue to climb new highs, breaking out of that resistant line at the $86.60 level. Now, if price will break out of the $86.60 level, I do want to be having a buy stop order to capitalize on the uptrend move. Now, the reason why I'm doing this is simply because of the strength of this trend to the upside. Remember, we have this strong and beautiful impulsive move all the way into this area before we begin to see this consolidation phase go on here. And for me, this might turn out to be a bullish rectangular pattern, which from a technical standpoint can be considered as a strong uptrend continuation pattern. So a breakout of the $86.60 level for me is going to be a good opportunity to join the uptrend move. So our stop loss will just be somewhere right below the $85.90 level, which will be dovetailed into about 70 to 75 pips, while we hope to continue that trend to the upside. So that is how we are going to be managing our trade today on the US All Spot. So basically, our center of focus for today's trading session is between the $86.60 level and the $85.90 area, where we want to exercise patience and wait for the breakout or breakdown of structure to give us a signal to jump into any position here. And of course, I will be with you on both my TradingView and Telegram platforms to give you updates as at when due. So I don't know if you have any questions as regards to my explanation so far. If you do, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions on these assets. All right. So in the absence of no questions, I want to assume that we are all on the same page. So in that regard, I will be moving on to the next asset on our watch list. So the next asset that is on our watch list for today is the cable market, that is the GBPUSD, and I'm beginning to see an interesting setup gradually unfold on the chart, and we shall be going into that in detail. Now, because I did not do a public publication on the GBPUSD, so I will be, for the benefit of being on the same page during the session, I'm going to be taking you through my thought process from the higher time frame, doing a top-down analysis so that we can see how we got to this present point in the market. So the first thing I did during the weekend while I was trying to dissect the current market structure in anticipation of this week was to run through the daily time frame so that I can have an holistic perspective into what is going on here. And in fact, what I did here was to take into consideration the nature of price action in the last 4 months, that is since the month of July. I think that's about 4 months, I guess. That's August, September, October. Okay, 3 months. So what I did here was to take into consideration the play of price action in the last 3 months in this market. And of course, if you look at the structure on the daily time frame, it is quite clear that the market is on a bearish momentum in the last 3 months, transitioning into a beautiful descending channel, as you will be seeing on your screen right now. And what I did here to identify this was connected the series of lower highs, as you will see here, to give me the resistant line of that descending channel, and of course connected the series of lower lows to give us the support line of that descending channel. Now, something interesting happened last week, as you will see. Despite the strong bullish momentum that started a couple of weeks ago, we saw as soon as price got into the resistant line of that descending channel, we saw an engulfing bearish candle push price to the downside. Now, at this point in time, the question here is the bearish momentum still strong? Is the pound sterling still under selling pressure? And will this descending trend line be respected in such a way that price will drop further to the downside into the support line, maybe to anticipate an uptrend again, or break down the structure to incite a sell-off? Or are we going to be having a situation where buyers will jump in, negating all attempt by the sellers to break out of the resistant line this week? Now, for us to answer this question, we have a setup on the 4 hours time frame, which I will be sharing with you in a moment. Now, before I go into that 4 hours time frame, one thing I want us to note here is that price is back at the 1.21, I think the 1.215 area, an area where we begin to see some buy pressure again. Could it be the retracement of this impulsive move has ended to incite an uptrend scenario? Well, let's check the 4 hours time frame. Now, on the 4 hours time frame, this is the beautiful setup I was able to identify here, where I'm going to be using the 1.21250 level as my key level for this week. And you know how we use our key level in this community. As long as price remains above that key level, I want to hold on to a bullish bias. But if price breaks down the key level, retest it a couple of times, then we want to be getting ready to sell. Now, as it is right now, price remains above our key level. And one thing I also observe here is that since the last week of the month of September, we have seen how that area around the key level, let me say between the 1.21250 and the 1.2050 area, had played a major role in negating all attempt by the sellers to break through that structure. So now, despite the strong bearish momentum we have been witnessing in the last 3 months, we can see that buyers and sellers are finding it difficult to break through that area. So as a result of this, I have identified that zone as a temporary demand zone. So as long as price remains above the structure, we want to consider buying the GBP USD. Now, to get a better idea or perspective into what is going on now, we want to see how market participants have been reacting to this key level since the beginning of this week. So our center of focus is going to be zoomed into the trading activities since the beginning of the week around that key level we identified here. Now, to do that, we want to scale down into the 1 hour time frame where we'll begin to see things more clearly. So I will just zoom it right in so that we can see things. So this is the key level here. So let's forget this key level and the fact that price still remains above that key level. Now look at what has been going on here since the beginning of the week. So the week has started on a strong bullish note, as you will see here. The price started this week around the 1.21375, and since then we have noticed higher highs and higher lows. Now we have a range where I have my resistance line of the range at the 1.21625 and the support line of the range at the 1.21375. Now, if you look at what happened during the early hours of today, we finally saw the breakout of the 1.21625, which happens to be the resistant line of this range. Now, this is a bullish signal for me actually, and price has broken out of that structure. And just an hour ago, we are currently witnessing a retracement into structure. So the question at this point is, will this be a retracement back into structure where the appearance of buy pressure here will be welcoming new trading opportunities at this point? So personally, I do want to be waiting for some reversal setup to come in around here, like a double bottom structure, head and shoulder inverse, or a falling wedge probably, to get me ready to join an uptrend move. And if price continues to climb, then a breakout of the 1.21750. So let me mark this level out on my chart. And you also want to be doing that accordingly, as we will be needing this to maximize the potential of this bullish move, is that if that is what the market will be presenting to us this morning. So we have the 1.21750 level. So we do want to be marking that level out on our chart. So let's see how this goes. All I would like to put this at the top. So now, in addition to this, we have observed higher lows. Of course, we want to have an ascending trend line, which we are going to be using to guide our trading decisions for this week. And what this simply means, let me thicken this a little bit. So what this simply means is that as long as price remains above that ascending trend line, we want to feel comfortable in our buy position. So let's bring back our candle chart and do some little adjustments so that the line can capture all the wicks here, all the pivot lows, sorry. So here we go. So we have a very simple setup we are going to be using to guide our trading decisions for today. So right now, price has broken out of the resistance line, has come back to retest the structure. So I want to see something like continued buy pressure around this area, giving me signs that sellers are finding it difficult to settle below the 1.21675. Then I want to be joining that uptrend move, then having a buy stop order again above the 1.21750 to join that uptrend continuation. Now, for the benefit of doubt, let's scale down into the 15 minutes time frame and let's see what is going on around this pivotal crucial juncture in this market. So scaling down into the 15 minutes time frame, let's see what we have. Okay, so we begin to see some buy pressure resume around this area. So for me, I will consider buying right now, and then let's look at buying again at the breakout of the 1.21750 level. So it's a risk worth taking. Let's see how this is going to play out and ensure your stop loss is in place. I will suggest anywhere close to this support line here, about 20 pips, 25 pips is not bad at all for this situation here. Let's see how the market will play out. And if it continues to the upside, then a breakout of the 1.21750 here will be welcoming more buy position. So let's see how far this will go if price will continue to climb up. Then we also have the 1.2200 area, which we could also use to maximize the potential of this bullish move. Now, in as much as we're looking out for buying opportunity at this juncture, you know how we do it in this community. We also want to take into consideration the potentials the sellers also have. Now, from this current structure here, we want to see what will make us change our bias from bullish to bearish here. Now, the first thing I would want to do here, if I do want to be selling, or if I begin to see that the market is no longer supporting the bullish momentum, well, I would want to see first of all this ascending trend line broken to the downside. Now, if this ascending trend line is broken, not only broken, we want to see some retest of the 1.21675 or the trend line, where continued selling pressure here confirms that buyers are finding it difficult to climb above the ascending trend line. And if this becomes the case, then we want to be getting ready to sell. And if we are selling, we join the momentum, had more sell position at the breakdown of the 1.21375, which happens to be where price started this week. Price breaks down the structure, we look out for more selling opportunity, and if it continues to drop further, breaking down our key level for the week, which is situated at the 1.21250, then this will be welcoming more selling opportunities here. So that is how we are going to be selling the GBPUSD. To sell the GBPUSD here is likely going to be taking about 2 to 3 hours before the setup matures. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So at this point in time, I still remain very bullish. I'm buying right now, hoping to add more buy positions above the 1.21750. But if it happens that we get taken out of our buy positions and continue selling pressure persists below this ascending trend line, then we'll have no other choice than to join a bearish move. And of course, I will be giving you updates in the comment section of both my trading view and Telegram platform. So these are my views here on the GBPUSD for today. I do hope I made myself very, very clear. But if you still feel there are some certain areas you want me to shed more light on or clarify for you, feel free to let me know in the comment section. I am here and willing to be of help in that regard. So as usual, I'm going to be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. All right, so I see your comment here, Hiker's Diary. All right, I'm very glad you find that clear enough. And well, in the absence of no questions, I do hope that we are all on the same page. And in that regard, let's move right into the next and the last asset on our watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And on the gold spot, we have quite an interesting setup currently ongoing in this market right now. And for those who had watched my video, the top-down analysis I did on the XAUUSD, you will see here that price action appeared to be transitioning into what I actually talked about in that video, as you will see that this week has started on a strong, or let me call it a slightly weaker note, retracing from Friday's multi-week high after breaking down that 1,918 level that I identified earlier. So for those who are with me on both my trading view and Telegram platform, you must have gotten an update as to how we are going to be managing our positions for today's trading session. Now, based on what is going on this chart right now, the big question that I will be asking is whether this is going to be a retracement of the impulsive bullish move representing a natural correction after that Friday's significant rise, or is it going to be a sign of an outright sell-off? Well, let's look at this from a technical standpoint. Now, the first thing we did here, if you watch my video on the XAUUSD, please, if you had not watched my video, the link is right in the description box of this current video, so you can click on it after the live session so that you can have a background knowledge of how we got to this point we are right now. So the first thing we observed in that video is that 1,900 level. That was our key level for this week, which was strongly broken out of last week Friday, as participants in the market were cautiously closing in some of their positions on the US dollar, buying the gold out of the uncertainty about the weekend, because we don't know what is going to happen during the weekend as regards to the Israel-Hamas situation going on here. So we saw about $100 turnaround last week Friday, which helped by a flight of safety heading into the weekend's geopolitical uncertainty in this market. So we from what I can say on Friday, that investors resorted to covering their short position on expectations that the ongoing Hamas-Israel war could keep upside risk intact for gold prices. However, you know that from a technical standpoint, whenever we have this kind of very strong bullish impulsive move, it's usually get to a point where we now start seeing some level of fear come in, where those who are taking advantage of buying at a very cheap price will want to be closing in some of their positions to make some profit. And this, of course, will usually reflect on the chart as a retracement of the impulsive move. Now, let's look at the structure from a technical standpoint. So price started on Thursday around the 1,870 zone, as we saw this impulsive move into the 1,930 area. Now, the new week has started on a bearish note. As you will see, price action has been finding lower lows and lower highs, which I'm of the opinion may be as a result of profit-taking activities, and then result into a retracement of structure into probably our golden zone area. So to project where the potential TP target or where the retracement phase that is currently going on here will culminate, I used my Fibonacci retracement tool, run it through the previous impulse leg, as you will see here, and of course aimed at our golden zone area, which is usually within the 50 and the 78.6% of that impulse leg, and that falls within the 1,900 and the 1,880 zone. So this retracement phase here, I'm of the opinion that it might get into this area where, when we start noticing buy pressure around this area, we will get ready for an uptrend move. However, as it is right now, can we take advantage of this retracement phase? And let's see if it will culminate within the zone. Now, this morning, I will have the simple setup that we are going to be using to guide our decisions. And this is this range here between the $1,927.50 level and the 1,918. Now, price has broken down the 1,918 with an engulfing bearish candle. Well, some of us took advantage of this opportunity. If you did, well done to you for capitalizing on that one. But personally, I missed out on this one, as it was still very early for me when this actually happened. But for those of us who had missed out on this opportunity, it's okay. The week is still very early, and there are still chances that price could retrace back into structure to confirm the breakdown. So for those of us who had missed out on this opportunity, we shall be looking forward to a potential retracement back into structure where they continue selling pressure around this area. That is signs that buyers are finding it difficult to climb back above the 1,918 will give us the privilege of joining that downtrend move. And if this happens, we join the bearish momentum, having our TP target anywhere between the 1,900 and the 1,800, which possibly will be dovetailing to a minimum of 160 pips and a maximum of 365 pips to catch here if price truly retraces into this area. Now, if price does not climb back above the 1,918 and instead continues to drop down, then we have a support zone here. As you will see right now, the lowest point price action has been for this week is along the $1,908 level. So you want to mark out this level on your chart. So if price does not retrace back to retest the 1,918 that was broken this morning, then a breakdown of the structure will be welcoming a downtrend continuation. So we do want to be on standby to continue that momentum all the way to the downside. Then if it continues like that, breakdown retest of the 1,900, we will be adding more positions to maximize and milk that bearish move to the downside. So let's see, at this point in time, we are waiting for either the retest of structure to inside the downtrend, or we look forward to the breakdown retest of the 1,908 to inside the downtrend continuation. So that is how we are going to be managing a sell positions here. So when price drops into this area around the 1,900, in fact, that potential TP target zone, let's ensure we move our stop losses accordingly, secure the positions while we wait and see how the market will react to this zone here. So if we begin to see buy pressure at any point in time, like a reversal patterns, higher highs, higher lows within this area, then we do want to be getting ready for an uptrend scenario here. So this is my view as regards to selling and buying later on the XAUUSD. However, it's still a possibility that price may not even drop further to the downside and instead continues to find higher highs. Now, in that case scenario, I'm of the opinion that we just wait. At this point in time, as it is right now, I'm only looking out for buying opportunities only at the breakout of the $1,927.50 and the 1,930. So these are the highest point price action has been in a long time. So I want to be looking out for breakout of that structure to join a bullish move. However, there are still possibilities where we can actually join a buy position even before the breakout of this resistance line happen. Now, the question you will be asking me is how? Well, the only thing that will make me buy even before the breakout of that resistance line happen is when I begin to see that seller's potential is beginning to thin out. And if this happens, we will be seeing something like higher highs and higher lows, something like this, breaking back above the 1,918. And if we begin to see something like this, then we can actually join before the breakout happen. Then we can maximize that move after the breakout happen by adding more buy positions to our existing trade. But trust me, if we begin to see potential momentum build up, I will definitely let you know on both my TradingView and Telegram platform. And remember, we also have the XAUUSD live window, which we usually gather here on this platform to monitor real-time price action on this asset. So you do want to be part of the XAUUSD live window, which usually kickstarts about 5 to 10 minutes into the New York session. So be part of that session so that we can be here together to see how we can capitalize on the next potential move on the XAUUSD. So this is my view here on the XAUUSD. So let's mark out these levels on our chart and let's see how the market is going to play out going forward. So if you have any questions whatsoever as regards to my explanations so far, maybe on the GBPUSD, the USOILSPOT, please feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to wait for your comments and questions. Then we shall be rounding off for today's trading session. Okay, I see your comment, Ika's Diary. You're asking that when higher time frame shows a bearish trend and after scaling down to lower time frame, it shows a bullish movement above a key level. So what we should do such a situation? Well, I'm not sure I do understand what you're trying to say here. Um, is it, does this have to do with what I talked about? If it is, which asset and what time frame is it, so that we can all be on the same page here, please. Let me know what you're trying to say. Does it have anything to do with what we discussed in this live session? And if it is, let's what assets. Kindly rephrase that statement so that we can be on the same page. So okay, you dropped another one here. Do we need to buy since the price is above the key level, or do we need to sell adhering to higher time frame? I just explained here that the situation we have on the XAUUSD is looking very bullish, of course. And when we have this kind of strong impulsive move, there are still possibilities of some retracement happen as a result of profit-taking activities. So usually when we have people buy at a cheap price, let's say around the 1,870 in this case scenario, there are chances that price could retrace back into structure before the appearance of buying pressure to join an uptrend move. Now, to project where this bearish retracement will go, since the beginning of this week, we've been witnessing a strong bearish note. How far will this bearish momentum go was the question I was asking, and we used the Fibonacci retracement tool to identify a potential area which is between the 50 and the 78.6% of that area. So for those who had sold right now, it's still looking very bearish right now, like a counter trend opportunity, a retracement of the impulsive move that started last week Thursday. So there are chances that we could have price break down the 1908 1900 area before we begin to see some buy pressure to join that uptrend move. So we are taking this into consideration right now. And the only condition that will make us buy, that is if price does not drop below the 1908, is to position ourselves above this resistant area to capitalize on a bullish move. Now, I also made mention here if the market is kind enough to reveal some build up in momentum before the breakout of the resistance line happens, then we might see something like higher highs and higher lows within the structure before we want to join a bullish move. And I said here that I will be giving you updates in my comment section on both my TradingView and Telegram platform if we do see any higher highs and higher lows around this area. But as it is right now, we still maintain a temporary bearish expectations, as I'm of the opinion that price will probably retrace first of all before the uptrend continuation happens. And as a result of this, we've marked out zones, which you can see on your chart right here. We have a TP target zone for sellers. We have a potential buy zone for buyers. If price gets into the structure, we will be looking out for bullish setup to join the uptrend move. So this is my explanation here on the XAUUSD Harker's Diary. So I do hope I made some clarifications to your inquiry there. If it's not enough, please let me know in the comment section. So like I said earlier, I just dropped the link to the XAUUSD live window right in the comment section of this current video you are watching. So you want to click on that link, click on the notify me button so that you get notified as soon as I come on live. So the XAUUSD live window usually kickstarts about 5 to 10 minutes into the New York session. And of course, we come here to monitor real time the XAUUSD and see how we strategically position ourselves for the next move. So I look forward to seeing you guys in the comment section of the XAUUSD live. And in fact, if you have found this content helpful and useful in making your independent trading decisions, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the YouTube algorithm to promote the video to a wider audience of traders who will find this content beneficial to them too. Thank you in advance for doing so, and for those who had already clicked on the like button, I really do appreciate your support. This is the cheapest way you can support this project, and thank you very much as you do so. Okay, I see your comments, Ika's Diary. All right, I'm very glad you found that clear enough. So it's on this note I would like to wish every one of us the best of luck during the New York session today. We were able to attend to three major assets, which is going to be the asset we are going to be monitoring for this week. So I look forward to seeing you tomorrow as we come back here to review how well these assets have been doing. That is the GBPUSD, the XAUUSD, and of course the USOILSPOT, after which we are going to be managing our positions tomorrow and get ready for another trading opportunities for tomorrow's session. So do have a wonderful day, everyone, and I look forward to seeing you guys right in the comment section of both my trading view, Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.